Welcome to my channel today. Today we are going to discuss gap trading fully explained. Gap trading fully explained. If you are a forex trader, a beginner, intermediate, or a professional trader, you must have something to take away from this channel on this particular topic. This is, in fact, I started becoming very successful in forex trading when I mastered this topic I am about to share now, gap trading. Please, before we proceed, I want you to subscribe to my channel. I want you to be part of my channel. Subscribe, share, comment where necessary, please. That is where necessary, you comment. Now, what is gap trading in Forex? Gap trading is just, or gap is just a jump in price. Prices move like a step. It opens, it closes and open at almost the same price. It closes and open at the same price. But when there is gap, it opens far below or higher than the closing price. It's like a staircase. The price moves like a staircase. Let's look at the channel. You understand what I'm saying? This is exactly how price moves. You can see it is like a channel, a staircase. Stop where it stops, it starts from there. But when there is a gap in the market, the price closes or opens far below or above the closing date. So where do we have gap here? Let's take this. This is where we have. You can see there is a gap between this candlestick and this candlestick. Fine. This market, this is a bearish engulfing pattern. It moves down to this place. The next price supposed to open here, but no, it jumped and opened at this particular place and moved to this point. That is gap. This is a downward gap. However, let us proceed as I discuss in details what we mean by gap. As you can see, it is the movement, the jumping of price away from the previous close. It's as simple as that. That is what we call gapping. Now, why and how do gap occur? The market is 5 days from Sunday around 11 or 12 to Friday 10 or 11, depending on the region. Now, 10 p.m. Now, Saturday, Sunday, the market is closed. However, economic activities take place within that weekend. Economic activities, political activities, these things are what moves the market. Remember, the market is closed, but the activities that move the market are still going on. So when the market resumes, it will quickly respond to what happened over the weekend. And that is why you notice a gap in the market, usually when there is such events. So that is the major cause of gap in the market. Or the market is going on, not ordinarily is going on. All of a sudden, a strong news, the death of a president, or the news, the unemployment rate, things may come up that will affect the economy of the currency pair you are trading. Then the market will jump in that direction. If a market is on a downward trend, that's you are selling the pair, and for instance, there is a death of a president of that particular pair, it will automatically move more down because speculators, traders will start thinking what will be the next action in the country. It is highly uncertain. So the pair will start losing its value. So news or weekend activities when the market is closed, political, economical, social activities in an area, natural activities like natural disaster, usually when they occur over the weekend, it affects the pair you are trading. It will jump either upward or downward. That is the major cause of gap in the market. Now, how do you trade it? As I said, sudden news, major economic releases, interest rate change, political events can trigger significant price um, jump. I have explained these things. So if those news are out, regular traders, it can lead to gap when the market opens and react to the news. Yes, the market reacts to economic news or political news or natural news, whatever news that 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 is attached or that affects the pair you are trading. So this is the main reason gap occurs and traders respond to it. We have two types of gap, the bullish and the bearish gap. This is it. Let's go back to the chart. Now, this is a bearish gap. The market closes here. The market opened here and closed here. Now, the market is supposed to open here, either go up or go down, but it jumped from here to this place, to here. This is where it jumped place, to, sorry, to this point. You can see this is where the market, from this price, this is the closing price, and it opened here. This is a jump in the market. So it's a gap. This is a bearish gap. Now let's look at the bullish gap. Let's look at the bullish gap. This is the bullish gap. Let's look at it. This let's check this pair. This is gold. Somewhere here you can see there is a little gap. Then gap is not small, no matter how it is. So far there is shift in price. Then there is obviously, if there is a jump in price, there's obviously a gap, whether be it small or be it big. It is a gap. It is a small gap. Now, a bullish gap, it is when the market is going up, as in this case. This is a very small one, as in this case. You see where the market closes. Now, you see where the market opened. This is where the market opened. You can see there is a gap between the market close and the market open, but it is in the up direction. So that is what we mean by bullish. I've described a bearish gap. Please take this note. Take note that this is a very wonderful trading system. If you're enjoying this video, I urge you to subscribe, share. Please be part of my channel because I will be coming your way with nothing but Forex facts. So, having known this thing, how do you trade the gap? How do you trade the gap? You must identify first that there is a gap. Yes. You must know what is a gap. Sorry, to some traders, it is called windows. The Western world call it gap, but those in Asia calls it window. So how do you understand window? As I said, always when there is jump in price, either in the upward or downward. So there is a complete space, there is a complete gap between the price to the closing and the opening price. That is the first thing you have to take note. Now, how do you trade the gap? Gap is an indicator. What does it indicate? It indicates either an upward or continuation of a upward trend or continuation of a downward trend. It's not a reversal. It's not a reversal. It's only in rare cases gap becomes a reversal, exhausted gap. But in most cases, is the continuation of the of the trend. So gap is a pattern or movement in a as a continuation indicator. Also, when there is gap, you observe it as support and resistance. Let me show you what I mean. Let's go to Euro USD. Now you see there is a gap here. Now there is a gap between these two. Now when the gap happened, we said it's a continuation pattern. That means the market needs to continue down. Is that taken? Now, but something happened. The first day, they could not close the gap. Now the market traded down. So if you are a short-term trader, you will make money the whole of the day. You will make money the whole of the second day. But third day, the market moves and even close the gap. Every gap is, as this is a downward trend, this gap becomes a resistance. If it is an upward trend, the gap becomes a support. Very strong one for that matter. But look at what happened. When this gap was closed, this bullish candlestick, this bullish candlestick closed this window. But you should not trade in that direction until another bullish candlestick. You know that this trend has reversed. But since you are waiting, assuming you wait for one day to trade this pair, you can see that the sellers has pushed back this. So this was supposed to be a fake breakout from this resistance, and this market will continue downward. But mind you that this is what? A support. Now it becomes a resistance. It becomes a resistance. In upward trend, the same thing happens. That is how you trade gap. So it is one of the trading systems that requires no indicator. Just understand the chemistry of what is happening there. Confirmation: ensure that the first day candle does not fill in the gap. What I mean is, I am a day trader, and most successful traders trade from day to weekly to monthly. So if this has happened and the market has opened here, I'm aware of there is a gap. The first day candlestick did not close the gap, did not even go close to the gap to close the gap. It forms the gap fully. So the second day I will sell. The third day I will sell. Be mindful of the third day. The third day now moves up, but did not fill. It fill in the gap. If you are contemplating, oh, this has happened, what do I do? This is a bullish engulfing pattern. Do I trade? No, you should wait for a confirmation. A confirmation is another bullish candle. But since another bullish candle did not close here, the market is coming down. Hope I'm making sense. Please, if you're enjoying this video, subscribe, share, and be part of my channel. Now, after the confirmation, I have said it, gap filling and confirmation, exhausted gap or reversal movement. Now, what I mean by exhausted gap, in a downtrend, when there is a gap, as this is, in a downtrend, there is a gap, and it has, the first day now has formed the gap completely. Now, the second day, filling the gap. The third day, move higher. This gap has been nullified. This gap has been nullified, but it did not happen that way, this way. So that is exactly how you trade this gap. Conclusion: if you are very much interested in making money easily from the market, gap trading is the best option. Is the best. It does not occur always, but even if it is once or two or three times in a month it occurs, you will definitely make money from it. Then it occurs, when it occurs in any pair, it works 95%. Yes, it does not, the opportunity does not come always, but whenever it comes, it is more or less a good opportunity. Let's come to think about it. The successful forex traders do not trade daily. They don't come to the market every day. No, they trade, or they act like the lion, the cheetah, the big boys in the market, in the forest. All those, the lion, tiger, cheetah, they don't go around looking for meal. Rather, they take their time, position, wait patiently, and once the opportunity comes, they hit it. So always, or almost every successful trader do. No matter your capital, just patiently wait for the market to mature. It may be once a month, twice a month, or three times a month. It's better you make $1 in a month than to lose $1,000. That is just how it works. Please, if you enjoyed this thread in my video, subscribe, share, be part of my channel so that other subsequent strategies, development in the world of Forex, I will bring it for you. Please subscribe once more. Thank you